cap to GDP. What we do is talk about the Indian market itself and the Indian investment space. The annual CLSA India Forum is currently underway. And to discuss how global markets are likely to behave in 2024 and the impact on Indian markets, we do have Shaun Cochran, who is the head of research at CLSA. Thank you so much for joining in, Shaun. What's the sentiment in the globe for India like? Largely because one, we pointed out, the GDP has crossed $4 trillion mark, and the market cap has crossed $4 trillion mark as well. India, will that continue to be the story of the next couple of years, decades? And thoughts on the valuations that the Indian market is trading at currently?
Sure. So there's two questions there. And as it comes to investor optimism, it's very high. Investors love the Indian story. And it's understandable why, in that India over the last 20 years has really earned investors' confidence that it can deliver growth and has great companies that are liquid and investable. Investors have been looking for a demographic story with growth opportunities and clear investment seeking to capitalise on those growth opportunities. And of course, that is how one would describe India. When we talk to the investors, as the world slows, as the developed world ages, one of the exciting stories that investors are always looking for is a young, dynamic population that's growing rapidly and has confidence and optimism. And again, that's how we would describe India from a CLSA perspective. And I think that that's genuinely describes how investors look at India. Which brings me to your second question, valuations. The challenge for investors in looking at India is to understand India will always command a premium valuation. Why? Because it has growth, it has the dynamism, it's captured investors' confidence and continues to look for opportunities and continues to list companies that are interesting, dynamic and growing. As we know from Warren Buffett, you can always look for cheap, but the challenge is what you're actually looking for is a reasonable valuation for a great company, and that is what investors have to face when investing in India, and I think they've come accustomed to that.
All right. Hi, Shaun. Good morning. This is Nigel on this side, and good to hear your views on the Indian markets as well as the entire setup. A quick couple of questions. One of the key factors that global equities are going to be looking at is the Fed pausing and maybe cutting rates. What are you all factoring in terms of rate cuts? That's point number one. And since we're talking about the globe, everything is good at a price, right? Is China good at this price, or would you stick to India?
Right. Okay, so again, two questions. Let's start with the Fed, and then we can look at the India and China comparison. So ultimately, with the Fed, the Fed has clearly signalled that it's seeking to pause. Investors in the first phase of that process will always celebrate that. They'll look at an end of tightening. The relative valuations of risk assets tend to move up when investors feel that the price of money is stalling or perhaps falling. As to whether or not the Fed will cut, my personal base case is that will ultimately come, but the driver of that is likely a deceleration of global growth that will be expressed in the US as well, which brings up the big R question: will recession ultimately come? The market has been looking for a recession last year or through the course of this year and given up on the idea of a recession, and now talks of no landing or soft landing. Ultimately, I think a recession is still a very reasonable risk and can lead to cuts, but Powell is seeking to channel Volcker and suggest that he's bringing discipline back to global investment central banking, which has been sadly lacking over recent decades. And so he will be slow to cut if and when he does, would be my base case. You then bring me to a second question, which is China attractive at its current valuation? And then implicit in that question, how does it compare to India? Let's start with the China part of that question and then move to the comparison. China is absolutely attractive from a valuation perspective. What investors have come to understand is China is ahead of the process on growth. Its demographics have already slowed down, and so there has been a derating of China as the repricing of that growth future unfolds. That then presents opportunities, and that as long as investors take a long-term perspective and believe that high-quality companies can deliver productivity and innovate, then of course there's attractive opportunities in China. What investors look to when they're looking to invest in China is having faith in that valuation ultimately driving a great return. In contrast, India is a fundamentally different investment. When investors are looking at India, they still believe that that demographic underpinning will source growth or will support growth for decades to come, and the math supports it. The beauty of demographics is we know with certainty how many 50-year-olds there are going to be in 50 years from now with a very high degree of certainty, nothing certain, but a very high degree of certainty compared to many variables we factor in markets. So India is a growth story, attractive and priced for that growth. China has become a story around it needs to deliver the productivity to realise the attractive valuations that make it an attractive investment from that perspective.
All right, India is a growth story, China is a valuation story. Shaun, final question then before we wrap up this conversation. Between India and China, how would you, what do you say, distribute your resources right now, given its growth and value, both attractive themes here? And the second part is Europe. I mean, how far are we from Europe coming out of the woods? And as a result of which, what would be perhaps the themes to bet on in India itself? Would it be more domestic or maybe some export-oriented themes too?
Right. So I think that for China, it's very much a case, it's a similar theme that can apply in both China and in India, which is that Asia has effectively become, over the last several decades, the manufacturing hub of the world for produced goods. And as Asia matures, it is now about moving up the value chain and improving both productivity and the value-added component of the goods that Asia provides to the world, but more importantly also to its own domestic demand. And so both in China and in India, we believe investors will benefit from seeking to invest in those companies that are in a strong position to serve both their domestic client base and the offshore client base, where they can move up the value chain by showing a clear track record of innovation, product improvement to become more valuable at the more demanding product sets and more sophisticated products. That is a consistent theme. Of course, the difference for India is that there is more of a growth element in terms of, rather than seeking to replace what's already been produced, so perhaps some import replacement for China, for India it's also just about the absolute growth opportunity. And India has many obviously exciting opportunities, whether it be it's doing well in aerospace, as an example. It has great innovation that's evolving around the 5G space and is looking to integrate the stack from an Indian perspective. That's the opportunity for India, is integrating the value up with the domestic growth. Now, you asked me one other question, which is about Europe. Europe is a challenging environment. We talked about demographics, and this is the stark contrast between India and Europe, which is that in India we have this fantastic young dynamic population that will grow. In Europe we have populations that are more advanced in the ageing process that are growing less, and so Europe is having a difficult time developing its own growth. And the state of the global economy will play a large role in where Europe heads. Ultimately, I'm not optimistic about an acceleration of global growth out of the developed world. So I think conditions will remain challenging for Europe for the foreseeable future.
Okay, all right, Shaun, thanks so much for stopping by and filling us in with your view on India. So it appears you're fairly bullish on India's prospects, and wishing you, as well as your team, a good conference ahead. Well, for the time being, let's shift focus to our special segment where we